And we are live. Hello, everyone. Welcome to a new episode of Blockchain Talks. It has been a while due to me being very quite occupied last couple of days. However, without further ado, big news: the Ethereum merge has finally arrived. Thank God, it has been more than 4 to 5 years in the making, approximately. The beacon chain, which is now the main chain, has been launched in December 2020. And finally, we have Ethereum, which is on proof of stake. Let's begin by doing a small market analysis. As you guys can see here, I'm now starting to use TradingView. If I F up, don't worry, I still need to get adjusted here to the control settings. Anyway, what we're seeing here are the trends for Bitcoin on the approximately monthly. So it is the beginning of September up until this date. Currently, we are seeing Bitcoin at around 19K, at around currently 19,695, perhaps 19,700, depending on which platform you are trading. This is on the monthly. This is a monthly chart. As you guys can tell, we had a higher high here, reached up to 22K. Sudden sell-off. You guys might start to wonder why it is, especially as it only occurred here yesterday. Where are we? Yesterday that the Ethereum merge occurred. You can see there was a little uptick here. Now, how to explain this little downward spiral? Well, as you guys can tell, there has been a lot of volume being sold. A lot of Bitcoin being sold. Sorry, my English is getting very bad today. High sell pressure, and as you guys can start to wonder and see, probably has to do with the Ethereum merge. People switching their Bitcoin towards Ethereum. We can actually look that one up if he wants to. Sorry, here it is. That's the Ethereum chart at 12 o'clock. Well, you can actually see the same thing occurring here. Major sell-off by reason Ethereum is still backed by Bitcoin. Bit weird, but you guys can see there has been some uptick volume here for Ethereum, and there was a sudden sell-off, probably due to the movements of Bitcoin speculators selling off. However, this one is quite important. The Ethereum merge occurred yesterday, so that was the little uptick we see here, but sudden downfall, which means other macroeconomic aspects are at play here. Nope. Let's zoom out here. So yeah, that's zoomed in. It's going to start zooming out. So this is since. Am I right here? Yeah, sorry. This is on the monthly. Naturally, we are more interested what happens close-wise. This is on 30 minutes. I'm going to. Oh, no. Wrong click. On the hourly, and you guys can tell here in the last 24 hours, we have been relatively stable. 12, 18, that's 14. So since yesterday, quite stable. Major sell-off here. Probably something had to do with the Ethereum merge. Was an immediate buy-up once again. And here you can see, well, there's a hefty battle going on. A little bit uptick now on the 1 hour chart, but we are relatively safe. However, start to zoom out. You can see there was a little rally here. We came from a much lower point here at around, I'm going to say, this is the lowest point here at the beginning of September, first week, where we crashed towards 18K. As you guys can tell, we are still almost 2K up from that lowest point. Let's zoom out even more. You guys can tell, doing actually quite fine. August has been quite a red month. There was some hopium, but immediately went crashing down. Major sell-off here, probably speculators abandoning the Ethereum network in advance, which led to a tremendous sell-off even on Ethereum itself, as most of the miners left the blockchain, which has become obsolete by now, but more on that later. August, this is July, so this is approximately 3 months. You might say we are at a stable lower level, approximately. We can go lower. I mean, the lowest point here on the 3 monthly, that's around 18,768. Lowest point here, 18,500. So I would say hardest support is at around 18,500 if you look at a 3 monthly trading chart. However, I might say we are at a good level to start DCAing. And you guys might tell me, yeah, but Dimitri, that's something you've been saying for the last couple of months. True, but if you mark my words, I always mentioned it each and every time we were here near a bottom. Even told it here, where I said anything below 20K is a bargain for Bitcoin. And as you guys can tell, it's getting rarer and rarer. That said, let's head over towards an article I want to analyze with you guys concerning the Ethereum merge. And I'm going to use the CoinDesk article. Why? Well, I've been reading it today, and there are a few misconceptions here being made. And, well, let's just say they are selling the news. Tech, the Ethereum merge is done, opening for a new era for the second biggest blockchain. Cost aside, the miner who had previously driven the blockchain with promises of massive environmental benefits. There's quite a lot to be said about that aspect. Let's continue. The massive overhaul of Ethereum known as the merge has finally happened, moving the digital machinery at the core of the second largest cryptocurrency by market value to a vastly more energy efficient system after years of development and delay. That's very nice worded. There was a waiting period of 4 to 5 years. The promise has been made for a very long while. So it's reason to celebrate that they finally, kept their promise, really. That's what it is about. It was no small feat swapping out one way of running a blockchain known as proof of work for another called proof of stake. Metaphor that I use is this idea of switching out an engine from a running car, said Justin Drake, researcher at the nonprofit Ethereum Foundation, who spoke to CoinDesk before the merge happened. Not getting all too technical, but the solution was actually straightforward. My idea why it took so long has to do with timing to have the maximum amount of funds locked onto the blockchain. By reason, the very first news, and do notice that I deliberately used 4 to 5 years ago, they were talking about transitioning towards proof of stake. Now, what else within the crypto market takes 4 to 5 years? That's a Bitcoin halving. And coincidentally, they timed the merge quite well. By reason, as soon as the beacon chain was launched, they could actually transition immediately towards a proof of stake model. However, December 2020 was the period whereby the bull run of 2021 began. It was actually in full swing, you see. The last Bitcoin halving was in May 2020. And people who remember it, there was a tremendous crash in March. There was some uptick, some pre-hype about the Bitcoin bull run and halving, to the Bitcoin halving that was to occur, with the subsequent bull run that would occur, and which started at around, I'm going to say, October, November 2020. In December, the beacon chain was rolled out. And those who are with me and have been quite a while in the crypto markets have seen, and you can easily scour the internet for older articles and updates concerning the merge. There were news items during 2021 whereby the Ethereum Foundation always said, yeah, we're not going to do it now, we are going to delay it towards next year, etc., etc. They've been spinning it up until 2022 January, and suddenly the market started correcting, and it kept on being delayed because quite recently, even in this year, it was presumably planned for somewhere, let's just say June, July. Liquidations occurred, things were delayed. In the end, they've chosen to push it through towards September, where they, among, considering analysis, and if you can see it quite well here, I'm going to do 1 year. So I'm going to graphically visualize it. December 2021, 2021, this is 2022. We had some major corrections occurring here. Do notice that I said in June, July, there was the initial plan. What occurred on the markets? Bum. And then they said, yeah, we're going to postpone it towards August. Okay. Went well, crashed down. And then, yeah, we're going to do it early September. And you can see here, market has been trading sideways. But all of this, until June, July, were heavy corrections. Do not forget, the Ethereum Foundation has Bitcoin in their private assets backing the Ethereum blockchain. So if Bitcoin corrects, well, Ethereum will correct as well in value. And, well, the Terra Luna crash occurred about here. And coincidentally, Ethereum merge was being delayed towards June, July. This occurred. 3 Arrows Capital went down together with Celsius Network. Heavy corrections once again. And then eventually they said it's going to be for September. Coincidentally, when, technically speaking, most of the market has reached its lowest point cycle-wise in the past. So when they say switching out an engine from a running car, it is partially true, but in reality, they have been timing the markets well in order to secure as much funds as possible and to launch it at the lowest level. To what means? Well, 2022 hasn't been chosen at random. You see, it's pinned in the middle of a bit in the 4-year cycle. I'm going to say, meaning, if you look, and I'm going to use the traditional trading chart that I tend to use. Say max. I'm going to start zooming in. There we go, 2020. This is what the market currently looks like. And if you were to zoom out, 2020, you will see something occurred like this. All-time high was in January, things moved, and we were, well, when the merge occurred, currently here, a stable zone. And we can expect following year to have some nice corrections. I'm even going to say, going to pin in May. There we go. This is when the next halving occurred. And you see sideways trading market for a few months. Uptick, corrections being undone. Yeah, this was the COVID crash. And there was pre-hype. Eventually, we get a chart like this. So, not to say they timed it very, very well. The bottom of the market has been reached. The Ethereum merge has been paused. It implies they can now start accumulating. Those who have seen my previous video have seen me debunking a variety of myths about the Ethereum merge, where it concerns the ability to unstake your staked Ethereum. People by now will have noticed that your Ethereum, in order to support the network, can still not be removed. I've said it many times before, you will have to wait until the Shanghai update. And until then, well, that's funds being locked inappropriately on the Ethereum network. You can't move the funds. They are locked in, which is one of the reasons why it still has such a high market cap. In previous videos, it has been mentioned that about 10% of all circulating Ethereum is currently staked in support of the merge, which now occurred and still can't be withdrawn. Anyway, let's continue. Payoff is potentially gigantic. Ethereum should now consume 99.9 or so less energy might be the case. However, do not forget, as soon as you start staking, you have the ability, you get granted the rights to become a master node. A master node still needs to be 24/7 online, meaning, well, you still have a sizable energy consumption going on. They say 99.9%. I dare say in reality, it's going to be much less, probably 70 to 80% less energy due to the nodes which must remain online. This I like the most. It's like Finland, hold on, to highlight it. It's like Finland has suddenly shut off its power grid according to one estimate. Ethereum developers say the upgrade will make the network, which houses a $60 billion ecosystem of cryptocurrency exchanges, land companies, non-fungible NFT marketplace, and other apps more secure and scalable too. I would also say that it makes it more centralized. I will also say that this is a tremendous exaggeration, even with the quote that they are hyperlinking to. My reason, people who follow me on social media will have noticed that I've been retweeting quite often Ethereum Classic and Ravencoin. Anyone believing that the miners would simply switch off their miners and start selling them because they can't make a profit are tremendously wrong. The energy consumption hasn't disappeared. It has been more distributed towards other proof-of-work coins, towards other proof-of-work blockchains. Raven received a tremendous spot. Actually, I can show you guys a chart of the Ravencoin network hash rate. As you guys can tell, it has seen a tremendous increase in hash rate. It went from a meager 3.85. Well, I'm going to. There we go. That makes it much more clearer. We had about 7 to 8 terahashes. It descended a little bit. Bull run was over. People were less interested. However, this is the effect of the Ethereum merge. It doubled, meaning miners have moved towards another blockchain. Same can be said here. Nice, eh? 25.72 terahashes, about 25. What happened here? Come on. 272 times 10. The network has become more secure. The only thing that I'm willing to admit is that I thought that the Raven network would receive more of the miners redirecting their miners towards the Ravencoin blockchain. Obviously, I was slightly incorrect. Biggest one is here, the Ethereum Classic, which in hindsight should have been obvious. Ethereum Classic. So there we have it. This disproves that an enormous amount of energy has been shut off from the network. Plain and simple. Miners just redirected their miners, still profiting from it, and Ethereum, well, took a nosedive. It remained intact, about 15 minutes long. Merge officially finalized. Was largely flat after the merge. Okay. Being closely watched by crypto investors, enthusiasts, and skeptics for the impact is expected to have on the wider blockchain industry. Indeed, quite a lot of projects have been built on Ethereum. From top of my head, I know that Chainlink is one of those networks, one of those tokens, I need to be correct here, built on the Ethereum network, among many others. Pureblood token is another one. And I know there are a variety of other ERC tokens which were awaiting for the merge before moving away, bridging towards perhaps Binance, the BSC network, perhaps launching their very own blockchain. So there will be an impact on the Ethereum network in its entirety. Not all projects built on Ethereum are in acceptance of Ethereum. Well, their current moves, obviously. So we need to watch out what will occur in the following weeks. By reason, well, I'm going to highlight this one once again. This is Bitcoin. There we go. There's a battle raging on. Small correction here. There has been a correction due to the, correction pre-merge. You can see slight downtrend. However, I believe there is a potential uptick in the weights. Why? This downsize came with bad news, considering that the SEC, the Security and Tax Agency in the US, has mentioned now that Ethereum has ascended towards proof of stake, that they might now be considered a security, meaning a taxable event, that they have withdrawn their own status from which they were exempt in the past. However, might be the case in the following week we will see another uptick, that this part, or miners or even previous supporters of the Ethereum network, selling their coins, issuing a sell-off, lower value, or to buy back higher, and that we will suddenly see an uptick on the longer term. It is entirely possible. As you guys can see, it occurred here as well. Let's continue. This is a little bit goodbye miners. Few words about this one. Where it concerns what is highlighted here, and this is something that I heavily agree upon with the guy I did blockchain bros with, Abu American. In our previous live streams, we said they are, meaning Ethereum, they are alienating their founding members, their hardest supporters. And now that they have retired their proof of work system, well, the miners have become obsolete. There's a decent amount of support, of true supporters of the network, who are gone. Perhaps a part have started staking their Ethereum that they amassed over the years in order to continue to supporting the network. But in reality, a lot of those people became disgruntled and are now looking at other venues. Ravencoin, Ethereum Classic, I believe Flux was another one, another big one being frequently mentioned. So this right here is actually very sour. It's basically them saying, fuck off, miners, we no longer need you. For what reason? Environmental impact, to make the blockchain greener. All they did was change consensus protocol. Change towards a consensus protocol where centralization in the form that they implemented is much more likely. Why do I say this? Well, there's one simple reason for it. Can you name someone in your direct environment who has 32 Ethereum to spare to start a masternode? Reality, no one has as much, especially considering, sorry, that was a little fly, especially considering current prices. That's about 1,500 times 32. That's a tremendous amount of money. So who's staking? The Ethereum Foundation. As it is known, they have more than 80% of their assets backed by Ethereum. Plain and simple, you can easily look it up. Assets backing Ethereum Foundation. There you go. Here it is. They hold about 1.294 billion worth of dollars in Ethereum, about 80.5% of their total assets. They can create multiple master nodes in order to influence governance within their proof of stake consensus blockchain right now. Who else has got our money? Well, exchanges, Kraken, Coinbase, Binance, they all have master nodes made available. How do I know? Well, as soon as the beacon chain was about to be rolled out, I applied for such a program on Kraken. I started staking a part of my Ethereum. And as a result, Kraken could amass a tremendous amount of Ethereum and start their own master nodes in support of the network. Meaning, well, there's only a handful of players, a handful of master nodes who aren't really independent. Exchanges aren't really independent. The Ethereum Foundation isn't independent. They can sit together for policymaking and influence the blockchain however they would like to happen. So it has become more centralized. With proof of work, we could say that Ethereum was still decentralized. By reason, there were plenty of people who redirected their miners towards Ethereum. It could have been people like you and me. I know Abu American was an Ethereum miner. He has now adjusted his miners towards Ethereum Classic that I know. In any case, the decentralized aspect has been gone. It's now a handful of master nodes in hands of central exchanges which are compliant to local governments. You can hear the bell ring here. And the Ethereum Foundation, who has also shown to be quite compliant with government rules, meaning the entire network has become centralized. Hello, stakers. Sounds like a positive aspect. It is very dark. Hello, you are effed up right now. And with that, well, for the rest of it, not much occurred. If you were like me, and in the meantime I've received it, there has been an airdrop of the new Ethereum proof of work token. I received it through Kraken in the form of Ethereum spot. It now makes part of my portfolio. It is Ethereum that I can use for selling and trading. It is a little reward I've gotten for staking since January 2021. So that is all there is to it. And with that, I'm actually going to finish this episode. I'm talking about for half an hour. So yeah, that's what occurred with the merge. What are the giveaways and what are the takebacks? As soon as you hear someone talk, yeah, but now the crypto industry has become much greener and Ethereum as well. Don't believe it. The miners have moved towards another blockchain. There hasn't been an energy shift like Finland suddenly switching off their entire energy grid. Didn't occur. The miners dissipated towards other blockchains. With the Ethereum merge, it became more centralized as the majority of master nodes are in hands probably of the Ethereum Foundation and a variety of centralized exchanges, by reason that they were, approximately spoken, the only ones who had enough Ethereum to spare in order to become master nodes. How much Ethereum did you need to become master node? 32. Not many people have more than 10 Ethereum. Not many people have 32 Ethereum to spare. A lot of people have been staking their small quantities of Ethereum on central exchanges in support of the network. I've done it myself, despite my hate relationship towards Ethereum. If I smell money, I can use it. So blame for that, I might be a little hypocrite, but at least I'm as honest to come about with it. Anyway, so a lot of people staked it on platforms like Kraken, Binance in support of the network, but in reality, not your keys, not your coins. All coins left on an exchange are in the wallet of said exchange. They can do whatever they want with it. meaning your staked Ethereum is being staked in name of the exchange you left it with. Your staked Ethereum cannot be withdrawn until the next update, the Shanghai update on the Ethereum network, which is since yesterday about 6 to 12 months in countdown. Approximately, I'm saying by reason on their website. To show you guys. Ethereum merge. There we go. This is being mentioned. Here it is. Where is it? Where was it? Can't find it. Staking energy consumption. In my previous video, I showed you guys, but since the merge occurred, they updated their website. And where is it? Here it is. They even removed the 6 to 12 months. Staked Ethereum and staking was continued to be locked without the ability to withdraw. Withdrawals are planned for the upcoming Shanghai upgrade. On before, it was 6 to 12 months. They've removed, and that's actually quite a dirty one, they've removed the time limit. So currently it is unknown when the Shanghai update or upgrade will occur. Keep that in mind. Your Ethereum is still staked, meaning that the market cap for Ethereum is still overinflated. With that, I'm going to stop sharing my screen, and I'm going to say thank you guys for watching. Hope you saw a few insightful things, and up until next time, bye.